Blessed are the flexible, for they shall not be bent out of shape. In this episode, I'm going to talk about how to be more flexible, how to maintain flexibility with your finances and with life in general. You're going to be blown away in this episode with what you can do to be able to handle the curveballs that life throws at all of us. I'm Doug Andrew, and if you've watched some of my other episodes, welcome back. But this is my studio. I've had a national radio show for 11 years now, and I love talking to my audiences via audio or video like this, and I love to write books. I've written 11 books. My goal is to write a book every year the rest of my life. And this is a concept in this episode that a lot of people express appreciation. So I have that beatitude, blessed are the flexible, for they shall not be bent out of shape. I don't want you to get bent out of shape unnecessarily, because in life, you can choose to be upset over certain things, but you're not obligated to be. And I think that's a translation of a famous German saying. So let's use this metaphor or analogy. If I were to take off from my home city, Salt Lake City, Utah's international airport, I actually used to be a pilot of a small aircraft, but let's say that we were 1 degree off course. And we stayed 1 degree out of 360 degrees, okay? We stayed 1 degree off course and never corrected that. And we went all the way around the planet, okay? Do you know that by the time we came back around, I would be hundreds of miles away from the destination if I was trying to go around the world and come back to Salt Lake City. 1 degree off, and I would be as far away as maybe Las Vegas, Nevada. So that's how critical it is, so that when we go through life and we have these things that knock us off course, physically, financially, spiritually, whatever dimension of our life we're talking about, the key is to get back on track, make little fine-tune adjustments so that you can hit your destination in the time frame you wanted or close to the ETA, estimated time of arrival, that you originally thought of. And I learned that as a pilot when I had my private pilot's license. You need to make these little adjustments because all of a sudden headwinds or turbulence comes up or this happens or that happens. And we all have those little curveballs life throws at you where if you're a parent and a son or a daughter all of a sudden has an accident and it requires you to take a few days off to be with them in the hospital, we all go through these setbacks, or maybe we lose a job. You need to maintain flexibility, and I'm going to share how to do that as I explain the power behind being able to bounce back or have resilience. Perhaps you've heard me tell a story about my wife, Sherry, and we had a home back in 1978 that we built. It was our third home. It was a dream home. It had 6,400 square feet, cathedral beam wood deck ceilings, and a master bedroom deck that you could go out on and look at the deer and elk bed down in the scrub oak below us. So we thought we had the world by the tail. And I built that home for $150,000. I didn't put one dime of my money into it. I've never paid a down payment for any home or piece of real estate I've acquired. That's a whole nother topic. But when we moved in, the home was worth double. It was worth about $305,000. We were only into it $150,000 in construction costs, and I didn't put one dime of my money into the property. So you feel like you have the world by the tail. Well, 4 years later, it actually was 24 months later in 1980, we had a major recession in America. And frankly, in 1980 in Houston, Texas, 16,000 homeowners lost their homes in foreclosure. And they didn't all of a sudden become bad people. They just couldn't make their mortgage payments. They lost their jobs in that oil crisis. Well, that rippled throughout America, and so we were not immune. And in 1980, due to some dishonesty with some of the supervisors above me in the company I was working for, they were sort of auditing that main supervisor, and they froze all of our income for 9 months, and so I didn't have any income. So long story short, even though I brought my delinquent mortgage current without an income by selling a duplex, I sold a timeshare at a ski resort, I thought, I got to sell my house. and we put it on the market, and it appraised for $305,000, but there were no takers, because when you have a recession, there's more supply of real estate than there is demand. And so we lowered the price from $300,000 down to $285 and $275 and $265 and $225. Now, I'll never forget the day when we walked into the county courthouse in Provo, Utah, and at the sheriff's auction, we watched our beautiful home get foreclosed on. Now, my wife and I went out the next day and bought another home with no money down and no credit. What did I learn? From that experience, I actually thought, you know what? Real estate equity in your home is not liquid if you really need it. When you need it the worst, it's the hardest to get. It does not have safety. Your house could be worth $300,000 one day and drop in value like mine did to $150,000. So that's just a number on a sheet of paper. And it did not have a rate of return. In fact, the only way to have a rate of return on real estate equity is to separate the equity, because the house or the real estate is going to go up or down in value, regardless of how much money or equity is in it. It has nothing to do with it. So I wrote those principles in a book, and I shared with the world how we were flexible to get through that. And because I shared that story and how we overcame it, and how ever since then, I've never tied up my real estate equity in the property and kept it separate in a vehicle that has liquidity, safety, and earns predictable rates of return. And I have weathered numerous recessions because of that flexibility. So the key to having your finances in order is to make sure you have that flexibility. To be able to, during a banner year where you're making a lot of money, be able to drop in a lot of money. That's why I don't like IRAs and 401ks. You can only put in a certain dollar amount or a certain percent of your income, and then it accumulates tax deferred, but when you take it out, it's taxable. And if you touch it before age 59 and a half, it's a 10% penalty. That's not flexibility, okay? And so I like to put my money into what I call my laser fund. And it's extremely flexible, so that if I had a banner year, I could throw in 200, 300,000. We have some people that throw in $1 million or $2 million. You have to structure it to accommodate that. But if I put in 300 grand and 4 or 5 days later I had an emergency and needed 250,000 of it back, I could do that because it has liquidity. I could probably access it with an electronic funds transfer or a phone call, because I have that flexibility. You can't do that with an IRA or 401k. You can't do that with a house or a building you have a bunch of equity in, because when you need the money the worst, it's hardest to get. You have to qualify for the loan. And so I learned that lesson. You want to be flexible, and that means having your money in an environment where it's liquid. You can access your money when you need it. 2 is to have safety, so that if it goes down in value, as we go through the ebbs and flows of the market and the economy, you don't lose. When it goes down, you don't lose, especially in real estate. If it's in the property, you will lose until the recession comes back. If it's not in the property, I keep my equity as much as possible over into my laser fund. So if the house goes down in value or any piece of real estate, I don't lose because my equity's not in there. It's over here, and it's very liquid and safe, safer than in the property. When the property goes up, I benefit, but if it goes down, I don't lose. Does that make sense? And so this is the key to having flexibility on your money, so that you can access it. You can throw in lump sums. You can pull it back out again without penalties or having to trigger unnecessary tax, and then be able to go down the highway of life and know, you know what? Just about anything that happens, I'm not going to get bent out of shape. And that's my goal for you. So what is the best instrument or tool? In my opinion, and I've written 11 books, and I've helped people for 45 years optimize their financial assets and minimize unnecessary tax. And so my 11th book is probably my favorite thus far. My most recent book is always my favorite, but The Laser Fund. And in here, it's actually 2 books in one. This has stories on this side. This has actual charts, graphs, and examples. And if you watch this episode that I'm going to recommend, you can get a free copy of this just for $5.95 shipping and handling. The key takeaway is the Laser Fund is one of my favorite instruments, because out of probably a dozen that most Americans put their money into, it is absolutely the most flexible. I mean, You can put in a lot of money. You don't have to put in, you can coast for 4 or 5 years. You don't have to put in a dime. Then you can make up for it. You can't do that on an IRA. You can't do that on most places people put money. And I love that flexibility. So blessed are the flexible. They don't get bent out of shape. So don't you get bent out of shape ever again.